On today's episode of the Cryptoverse, why I'm short Ethereum and long Bitcoin, an article by Tuur Demeester. TunnelBear is the simple VPN app that makes it easy to browse the web privately and enjoy a more open and secure internet experience. Try TunnelBear for free by checking out the link in the video description below. Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I'm your host, Chris Coney. So let's get into today's article. So we have an article from a slightly different source today. This is actually an article on medium.com, but it's from Tuur Demeester. I'm on this guy's mailing list, and as it says here, he's the Economist and investor, editor-in-chief at Adamant Research. And Adamant Research are I would call them a serious set of folks who are very well, highly trained analysts. And they've been around long before the whole cryptocurrency thing came along. But now they specialize in studying this area. So this article came to me in the newsletter that they sent, and it says why I am short Ethereum and long Bitcoin. And I had that in mind to cover. And then when I looked around the other news today, I thought, nah, this article is far more important to share with you. So for those of you that are not well versed in the world of trading lingo, what this means when he says I am short Ethereum and long Bitcoin means he expects Ethereum to go down in price and Bitcoin to go up in price. So he's saying I'm selling my Ethereum and buying Bitcoin, right? So that doesn't mean that's what he's actually doing. It's just when you say I'm short or I am long, it's just a way of communicating your attitude and your outlook on a particular investment. So let's read you the first bit of this so we can set the scene. This is quite a long article. I'm not going to go through the entire thing. I will link to it, of course, as always. But I've picked out just a few gems to share with you and interpret. So this first bit, it says, when it passed a market cap of $1.5 billion, both in March and in May, Ethereum became the highest valued non-Bitcoin cryptocurrency ever. The enigmatic project is no doubt the altcoin that has the most Bitcoin enthusiasts confused or even rattled. People are wondering whether Ethereum could be Bitcoin 2.0, kind of like Facebook versus MySpace, or when VHS overtook Betamax, and in this case, Bitcoin would be Betamax. And others have stated that Ethereum is carving out its own space entirely, calling it the oil to Bitcoin's gold. So when you assess normal commodities, you wouldn't say that oil was a competitor for gold, even though you could invest your money in both of those things. But in the real world, their use cases are very, very different. Now, even here, he's put a tweet from Andreas Antonopoulos, and Andreas says that Ethereum is a competitor to Bitcoin like a shark is a competitor to a lion. And Andreas says you can have two apex species in different niches that don't compete. So a shark and a lion are at the top of their respective food chains, but they're not going to eat each other, are they? And that's kind of the point Andreas was making. Now, Tuur says, Tuur is his name, the author of this article is Tuur, and he says, I don't share either opinion. In my view, Ethereum is direct competition with Bitcoin, and going forward, it'll most likely lose market share against it. So he's expecting Ethereum's market share to retreat and be retaken by the Bitcoin community. So this is the first part of a two-part article. And this first one talks all about the flexibility that Ethereum is based on. So let's see here that he lists what he calls substantially underappreciated concerns about Ethereum and the cryptocurrency ecosystem. Now, he gives some very good advice here. I've highlighted this just to share with you if you do think about getting into trading or if you're trading now. He says here in orange, if after reading this article, you feel inclined to also short Ethereum against Bitcoin, I suggest keeping in mind the following points. So shorting is where you sell now and buy later. So if Ethereum is like at $10, you can actually sell now, and then you say, I'll pay for that Ethereum later on. And then when the Ethereum goes down to say $5, you then buy the Ethereum that you previously sold, and then you make the difference, right? So it's a reverse trade. So he says here, point number 1, professional traders risk less than 1% of their capital in any given trade. And 2% is a maximum commitment. That's also his rule of thumb. So I always say, never invest or risk any more than you can afford to lose. So you set aside your trading budget, your trading account. So if that's $10,000, that would mean that on any given trade, you would only ever risk a maximum of $100. So on that particular trade, if you lost it, you lose $100 and that would be it. Then the second point is, he said, trading positions can only be held by an exchange. And this is specifically as it relates to Ethereum and Bitcoin. And he says that means you will be subject to significant risk of loss of your funds if the exchange gets hacked, because you have to deposit your funds with the exchange in order to place a trade in the first place. So that is an additional risk you're taking on top of actually risking your money in a trade, right? So that's something to bear in mind. And then he says a number of smart people are ether bullish, meaning bullish is long, but bullish is where your attitude is positive for the long term of Ethereum. And he says, I suggest studying their arguments, maybe even their direct criticism of this article. Now that to me shows he's a big man, because he's not claiming to be right. This is an opinion piece. And he's fully reserving the right to be wrong about everything he says here. And that to me shows he's a big man. And when I say a big man, I mean he's got his ego in check, and he's got the right investing mindset. And these are the kind of characters that I like to follow. People who have good characters. I don't follow people because of their accolades or their awards or whatever, whether they've won a Nobel Prize. I'm looking for their character traits, because to me that's what endures. And then his final point here is, even if my analysis is correct, I could lose money on my trade. Markets can stay irrational longer than we can stay solvent. So markets aren't rational, people aren't rational. That's one of the fundamental flaws in economic thinking, is that people are rational actors. They're not. 90% of the decisions we make are not rationally considered, especially when it comes to buying stuff. Because we buy emotionally and then we justify rationally, right? So markets will remain irrational pretty much forever, and that will long outlast how much money he has in his trading account, which is why he says the markets can remain irrational a lot longer than he can remain solvent. All right, so this next bit I've highlighted here is he's talking about Ethereum's goal to be an all-in-one, decentralized financial system with its own native currency, greater flexibility and functionality than Bitcoin, much easier to code for, blah, blah, blah. He says, however, I think there's a catch. He says, having followed the project since its inception, I'm concerned that a number of risks and fundamental issues are being overlooked in bootstrapping this ambitious project. Now, bootstrapping is like when you are strapped for resources and you have to sort of make do with the resources you've got available, and be very resourceful. That's how I interpret the word bootstrapping. Anyway, he says, I think the project at least needs to undergo a big overhaul, and at worst needs to be abandoned entirely to prevent more intellectual and financial capital to be wasted in the pursuit of impossible goals. Now that's a strong statement if I've ever heard one. And he does qualify that just underneath in parentheses by saying, well, here is probably a good place to acknowledge that I'm not a computer scientist or even a coder. He said, I hope to compensate for that by linking back to sufficiently technically credible sources. So that's his high-level position. So then I've highlighted this bit in green that says, Bitcoin's core protocol does everything to maximize security so that it can be used as digital gold and a decentralized store of value. Ethereum has a different approach. It prioritizes flexibility, and I argue compromises on security, speed, and even cost. Now, one thing I will say here is that if there is one thing that I've learned in my 11 years of marketing, is that a key element of success is being excellent at a few things rather than being okay at a lot of things. So in business, business, an organization, any organization has to eventually serve users or customers, right? The more an organization tries to do, the broader it tries to offer, the more markets its offering overlaps on, and therefore the more competitors it has to fight. For example, this is a crazy, stupid example, but it'll make the point. Let's say I'm a computer programmer, and let's say I want to make a tool that allows podcasters like Chris Coney to highlight portions of the articles that they discuss, right? Like the one I actually use, which is a Chrome extension. Let's say I set out to make the world's best highlighter extension for Google Chrome, right? And actually invest all my energy in that. Now, there may be other applications out there that have a feature of highlighting bits of a web page, but you can bet with almost absolute certainty they won't be better than mine. By the simple fact that I've invested all my energy, creativity, attention, and focus on that one goal. And by the mere focus of attention, I will make distinctions, I will create features that my competitors just will not have been able to think of by the very fact that their attention is spread over many different things. So then the more I dilute my attention, if I start extending the feature set to 2 or 3 or 4 features, then each of those features will have a whole bunch of competitors on their own. And I can't possibly expect to be the world's best provider of each of those individual features. That's not to say you have to stick to one thing. The point I was making is that the broader you try to do, the more requirements you attempt to cover, the more diluted your energy and the more competition you will encounter. So that's a high-level business and philosophical point that's just from experience. And these things, these principles apply to cryptocurrencies because they are organizations. They are decentralized, autonomous organizations, which is why someone like me can be an authority on this, because I don't need to understand cryptocurrency, because that exists within a wider sphere called the business landscape. And there are well-established rules and principles that cryptocurrencies are not immune to, because ultimately they have to serve the marketplace. And that's what entrepreneurs have been doing since the beginning of time. So the successful ones will know when a project's going to succeed or fail by the mere fact as whether they adhere to these business principles of the marketplace or not. So moving on here, under this heading of flexibility, which is the main bulk of the article, and actually that's where Ethereum has sort of planted its flag as being this is one of our key features. Tuur is sort of saying that the author, I'll refer to him as the author because it's difficult for me to pronounce Tuur, and you know what I'm talking about. So the author is saying that is actually its weakness. So here it says, the Bitcoin digital cash core protocol is a stern and barren environment. Its primary client is called Bitcoin Core, which runs the C++ programming language. That's what it's written in, right? And then it says, Bitcoin uses a scripting system, and there's a list of less than 70 precise commands that can be executed at the core protocol level. Now, I think this is a big plus, if you'll excuse the pun, because C++, the programming language, is very widely used, and it's very old. In fact, it's as old as I am, because it was first created, announced, or whatever, born in 1983. That's how long C++ has been around. Many elements of Microsoft Windows use C++, and it's just well established, put it that way. It's tried and tested as a programming language, and that's a good thing when you've got a lot at stake. So that's the code that establishes the Bitcoin network with Bitcoin Core, right? Then the toolkit you're left with in order to actually ask the Bitcoin network to do anything is a set of commands, and there's less than 70 of them. That is it. Now, Andreas Antonopoulos has pointed out how creative people have been in combining these 70 ingredients in such wonderful ways. And I agree. There was an important moment in my life when I realized the value of limitation. So when you have a very limited set of options, it kind of forces your mind into a creative mode. And I can't even begin to tell you how many great ideas that I've generated this way. So, bottom line, Bitcoin has some very tight parameters, very tight boundaries which people have to operate within, and I think that's a very positive thing. Because it keeps the amount of possible complexity down. Now let's now move on to this purple bit. Quote, instead of having a protocol with a lot of features, what you have is a protocol with a built-in programming language, and then you can write whatever features you want on top of it. Close quote. So that's Vitalik Buterin, the original creator of Ethereum. And then the author of this article says, the challenge here is that flexibility comes with a large attack surface. So the author is saying that Ethereum is built the other way around to Bitcoin, where the programming language is the part that people use to build stuff on top of Ethereum. So if you want to attack Bitcoin, you have to do that with those 70 or so commands that you have to work with. And they present that very tight set of rules. Whereas Ethereum, there are a lot more tools at your disposal. And that might make it easier to make Ethereum do what you want it to do if you're writing an app. But it also means that attackers have a lot more tools at their disposal. It says here about the hard fork that happened in Ethereum. And it says here, supposedly the hard fork was a decision by community consensus. Even though voting on the issue occurred within a 12-hour window, during which owners of less than 6% of the ether in circulation actually cast a vote. I don't know about you, that doesn't sound like community consensus to me. Kind of sounds like one of those situations where the people holding the vote had already decided and sort of as a formality was like, yeah, should we do a hard fork? Anybody right? Okay, fine, let's say everyone decided. They give them a very short amount of time to respond. Before people even realize, it's like, what happened? Oh, it's already been decided. And then they put it out there. The perception was, hey, community consensus, everyone agreed. Whereas, assuming these numbers are correct, you only had 12 hours to respond. You might not have even checked your bloody email in 12 hours. And less than 6% of the Ethereum community actually vote. That's a problem. So now let's go to the bit in yellow. So it says, in conclusion, if Ethereum is to become the transaction ledger, quote, to execute a wide variety of services at the global level, close quote, then its contracts and programming languages need to be sufficiently robust. The question remains whether the flexibility of the network is undermining this much needed robustness. And I'm afraid that it is. So that's the author saying that he believes the flexibility is its Achilles heel. The problem with that is that's also the very foundation upon which it was created. I'm going to paraphrase Andreas Antonopoulos again here and say that a blockchain project doesn't need to be any more complicated than necessary. If you say, we're going to build a blockchain that does A, B, and C, you need to honestly ask whether all of those things actually need to be built on a blockchain. Maybe only one of those things need to be built into the blockchain itself, and maybe you could utilize the services of an established chain to do that even. I mean, look at what Kim.com is doing with Mega Upload 2.0 and Bitcash. See, he's smart. He's using the existing might of the Bitcoin blockchain to build his new business, which means he's going to very quickly have something useful for people to actually start using. And he'll be able to go to market much quicker than he would have done if he insisted on building his own chain. But like I say, he's smart. He's not just IQ smart like cryptographers and developers. He's street smart as well. So this final bit in green here says, in closing part 1, because this is a 2-part article, it says, in the forthcoming part 2 of this article, I plan to discuss 3 aspects of the Ethereum network: speed, cost, and security. I'll take a deeper look into the planned transition to proof-of-stake protocol that uses sharding as a strategy for on-chain scalability. Meanwhile, I welcome comments and thoughts. Now, my comment on that is I currently have no idea what sharding is, quite frankly, even though I'm a computer scientist as well. But what I will tell you is that changing the fundamental consensus algorithm on your network doesn't exactly inspire me with confidence. Again, I always go back to my study of human nature in psychology. And the way to gain trust is through consistency. So this commitment Ethereum has to being wildly flexible sounds like a good idea in theory, but just seems too flexible to get the traction and to maintain the confidence of the community, like Bitcoin has. So thanks for watching, guys. If you liked this video, like it. If you disliked it, dislike it. Leave me a comment with some feedback and get subscribed. Or even consider supporting me directly by sending me a Bitcoin tip to the address on the podcast page. If you want to support me without actually spending any money, click the Steam It logo on the podcast page and vote for this episode on the Steam network. That'll get me some cryptocurrency, but it won't actually cost you anything other than a few minutes of your time. If you'd like something physical in exchange for your donation, then head over to the Cryptoversity merchandise store, where you can buy yourself a t-shirt or an iPhone case with the Cryptoversity branding on it. That kind of thing helps us out a lot. Or if you'd like more structured information on Bitcoin, cryptocurrencies and blockchains, head over to the courses section and buy yourself an online course. That's all for today, guys. So until Monday in the next episode of the Cryptoverse, it's me, Chris Coney, saying bye for now.